Hello everyone! Welcome back to my channel where we talk about the hottest financial trends and strategic investing tips. If you're new here, please stick around because today's video might be a game changer for your financial future. By the end of this episode, you'll have actionable points, innovative ideas, and a clearer view of how 2025 could play out in the US stock market. Now, let's dive straight in. First, let's set the stage. There's a lot of buzz suggesting that His Excellency President Trump will return to office soon, which many believe will have a generally positive effect on the stock market. Historically, markets often react favorably to pro-business presidents who focus on lower taxes and fewer regulations. According to the White House archives of Trump's previous term, corporate tax cuts and business incentives did inspire a wave of investment and stock market growth. That said, the market isn't just about policy, it also has a life of its own. Second, let's talk about the so-called honeymoon effect. Often, when a president first takes office or returns to office, investors are optimistic. They anticipate that new policies will revitalize economic growth, lower taxes, and bring new confidence to the business environment. In early 2017, we saw a surge in market enthusiasm as investors priced in anticipated regulatory rollbacks. By 2025, if we see a similar pattern, the first quarter might indeed look strong, mirroring that wave of optimism. Third, despite this optimism, markets run in cycles, and even the best news can't prevent periodic corrections. One famous investor, Warren Buffett, is reported to be holding a historically high percentage of cash, similar to what he did before the 2007 market peak. This detail was highlighted in Berkshire Hathaway's annual shareholder letters. It indicates that seasoned investors are bracing for possible turbulence ahead. When cautious voices emerge, it often hints at a possible downturn or correction on the horizon. Fourth, let's discuss valuation. Some analysts argue that the market is still riding high even if it's not at nosebleed levels. But if you look at data from multipl.com on the S&P 500 PE ratio, valuations have at times been well above historical averages. High valuations can be a precursor to volatility. The real question is, will Trump's policies such as potential new tax cuts or a revised approach to tariffs offset these high valuations? There's no definitive answer, but it's wise to stay prepared for dips. Fifth, there's the question of U.S. immigration policy. During Trump's previous term, there were stringent measures aimed at expelling undocumented immigrants, as well as overall stricter immigration guidelines. Some believe limiting the labor supply can push up wages for U.S. workers, while others believe it hinders innovation and economic growth by reducing the pool of global talent. Either way, these kinds of measures can create push-pull effects on certain sectors, especially those reliant on a steady flow of skilled or unskilled labor. If the new administration in 2025 reintroduces these policies, businesses in areas like technology and agriculture could be affected. Sixth, let's not forget the enemies or opposition forces in the U.S. political sphere. Even if Trump returns, he may face stiff resistance from various corners of Congress, not to mention public opinion. Legislative gridlock could slow down or dilute the impact of his proposed policies. Imagine if major tax cuts are blocked or severely watered down. Markets don't like uncertainty, so any legislative pushback could spark volatility. Typically, investors learn to navigate these battles, but the short-term impact might be sharp fluctuations, especially if sensational headlines amplify the drama. Seventh, we should address the possibility that things might get worse before they get better. Sometimes, big policy changes or major showdowns lead to short-term sell-offs, particularly if new tariffs rattle supply chains or if controversies spark uncertainty. In mid-2025, we could see the bubble burst or a significant correction if the market feels overpriced and if renewed tensions spook investors. This aligns with historical precedents where the market soared on optimism, then stumbled when reality set in. It's crucial to build a diversified portfolio. You don't want all your money tied up in high-risk stocks that could plummet in a downturn. Look at some real-life examples. In 2008, many investors who diversified into bonds, gold, or other safe haven assets saw less severe losses. History repeatedly shows that a balanced approach can help protect your investments. While no one can predict the future with 100% certainty, diversification often provides a layer of protection. Ninth, consider setting aside some cash or liquid assets to capitalize on dips. Legendary investors like Warren Buffett love to buy when the market is in panic mode because undervalued stocks can offer great returns when the cycle swings back up. If you have an emergency fund plus some extra liquidity, you'll be able to scoop up bargains rather than being forced to sell. 10th, remember the importance of mental resilience. Market cycles can be emotional roller coasters. The honeymoon effect might make you feel like you're missing out if you aren't fully invested when everything is soaring, but overextending at a market high can be disastrous. Similarly, if a bubble bursts, fear might tempt you to sell at the bottom. A steady mindset can help you weather these storms. Eleventh, think about your specific goals. Are you a long-term investor aiming for retirement security, or a short-term trader trying to profit from swings? If you're focused on long-term growth, short-term volatility might not matter much, as long as you have the right strategy and time horizon. If you're more of a trader, then you'll need to pay close attention to daily market movements and possibly deploy stop-loss orders to protect your downside. Twelfth, stay informed using reputable news and data sources. Keep an eye on economic indicators like GDP growth, unemployment rates, and consumer sentiment, which can change quickly with policy shifts. Resources like Yahoo Finance and Bloomberg can help you track the latest movements and evaluate whether the market is overheating. 13th, you can also look into defensive stocks or sectors that might hold up better if a bubble bursts. Companies that provide essential goods and services, like healthcare or utilities, often prove more resilient. If large technology stocks begin to slide, these defensive plays could help stabilize your portfolio. You could also consider funds that focus on dividend-paying stocks or real estate investment trusts or REITs for added stability. Fourteenth, try to avoid emotional panic selling. History has shown that markets tend to recover over time. According to S&P 500 historical data from Yahoo Finance, even after the 2008 meltdown, the index eventually soared to new heights. Instead of dumping everything when the market is down, reevaluate and see if you can position yourself to benefit from the rebound. That's how many savvy investors come out stronger on the other side of a crisis. Fifteenth, and finally, don't forget to subscribe to my channel if you want more insights like these. We're all trying to decipher the direction of the 2025 stock market, but remember, knowledge is power. The more you understand these cycles and the policies that drive them, the more confident you'll feel about your investment decisions. So, to wrap it all up, the US stock market in 2025 could experience a short-lived honeymoon rally if Trump returns with pro-business policies like tax cuts and selective tariffs. However, we shouldn't ignore the possibility of political obstacles, potential overvaluation, and natural market cycles. Things might get bumpy, and a major correction could occur as soon as mid-2025. The best defense is preparation, diversify, keep some cash on hand, think long-term, and always stay informed with credible sources. That's it for today's video, folks. I hope you got real value out of these actionable points. If you found this useful, please tap that like button and hit the subscribe button right now so you never miss out on important updates. Share your thoughts in the comments below. Do you think 2025 will be a boon for the market, or will we see a massive crash? Let's discuss it and help each other make better decisions. Thank you so much for watching, and I'll see you in the next video.